SE6, SE7, and problem 1, okay? Now what you're going to find out, here's the thing. I assign a lot of problems. They're the ones that I think are the most important for you to know, all right? I'm going to work examples of those problems. I'm not going to work them all for you. I just can't. There's just not enough hours in the day. But what I do is I post this video so you can watch these basics. Then I give you a couple days to work on your problems, and then I will post the solutions so that you can check the problems that you worked. You can work through additional problems and check your work right then before I give you the quiz. So the way the semesters work is I assign some discussion questions which are in the discussion thread. You are required to post your answers to the discussion thread. Once you've posted your answers to the discussion thread, you have the ability to comment on other people's. You are required to comment on 2 other class members some problem that they answered. Doesn't have to be the first one, doesn't have to be the last one, okay? Don't wait a couple days to go back and do your commenting, because if you do your own posting and then you comment all at once, what happens is the first people that get their posting done get all the comments, and the later people that get their posting done later in the window that I give you, they won't get commented on and they won't feel like they're a part of the conversation, okay? Then the next thing is that I have these problems that I want you to start working through over a couple of days. Then I will post the solutions, and then your quiz. I always have you do, there's an online quiz in Cengage, which I have those instructions in the syllabus. You must do that first. That's the first thing you do, is read the chapter and do the online quiz that's in the student portal of Cengage.com, okay, for our book. And I have all that in detail in the syllabus. Then you answer these discussion questions. Then you work on problems. And then I don't do big exams. I can't do that online. What I found works best for me is I have a multiple choice and sometimes matching quiz for each chapter, and those are your exams. So we are literally working one chapter at a time. So we'll get this thing started on a Monday, and then the end of the chapter will be on a Sunday. Chapter 1 is very light and easy, so it's a good one to get off to the right start, because technically a lot of you won't even log on until Tuesday, and that'll be a shortened up amount of time. But there's fewer problems, fewer concepts, and that quiz will be due on Sunday night, and then you will start over on Monday with the new information. Okay, so I have all the assignments are in the chapter by chapter area that you will see. And then I also post a lot of announcements reminding you of where to look for things, or giving you a hint when I find out that people are having problems. If you will use the online email that's in Blackboard, you could make your question open to everyone. I'll log on every day and answer all questions I can, but some of you will end up answering each other's. And also, if we can all see each other's work, then if one of you asks a question, I promise you somebody else wanted that question too. Okay? So right now, let's work through SE6. SE6 is designed to show you how the income statement affects the owner equity. Okay, so the first thing we're going to have to do is we're going to have to set up the accounting equation and solve for equity, because the problem didn't give us all the information that we need, okay? Okay, so the problem tells us that at the beginning of the year, which I often call beginning balance, or BOY, beginning of year, assets were $280,000. and liabilities were $120,000. Okay, so that means owner equity must be $160,000. Okay, so first we have to solve for owner equity using the accounting equation. Then we are going to find out what the components are of owner equity. Okay, because the end of the year balance is Assets are $400,000, so see, we've grown quite a little bit this year. And liabilities are $140,000. So that means that owner equity must be 400 minus 140, 260. Okay? What we have to do is figure out how owner equity got from 160 to 260. Okay? So, let's see here. The problem also tells us during the year, the owner invested an additional $40,000 in the business. Okay? So, investments would have increased owner equity. Okay? We put in an additional $48,000. Okay? The owner, oh, I'm sorry, it's just $40,000. The investments were $40,000. Investments. Okay? During the year, the owner invested an additional $40,000, and then they took out $48,000. So see, the owner would withdraw from the business profits if they want to. So we call those owner withdrawals. Okay? WD, withdrawals for short. Okay? Now, apparently though, we've got $260,000 in equity at the end of the year. So we must have made how much? Okay, so see, equity changes really only 3 ways for us. I mean, when you're a more advanced accounting student, you will start talking about some other things. But what affects equity? Investments by owner. So you would increase your assets because the owner put cash into the business and equity increases. Okay? Withdrawals by the owner, cash would go down, equity would go down. Net income increases equity because, see, when you're profitable, your assets move ahead of liabilities by the amount of net income. Doesn't mean assets always increase because you may have used your profits to pay off loans, but assets move ahead of liabilities when you're profitable, and that's why equity goes up. So net income rolls into equity. Otherwise, you can't make a balance sheet that balances, okay? Because if you keep equity, net income has to be closed to equity to make the balance sheet balance because assets moves ahead of liabilities when you're profitable. So here we are. We start with $160,000. We get an investment of $40,000. So that puts us at $200,000. I'm going to do a tiny little subtotal here. The owner takes out $48,000. Okay, so that would put us at $152. So apparently net income was how much? What would net income have to be to get us from $152,000 to $260,000? Well, 260 minus 152, 260 minus 150 would be 90, so it must have been 88. Let's check our math. 2 and 8 is 10. No. 6, it'd be, I've gone the wrong direction. I need to look at my cheat sheet because I can't do this math in my head on the fly with you guys, which is probably sad, but you kind of get flustered when you're on camera. Okay, yeah, I went the wrong way. 108. Apparently net income was 108. Let's check this. 2 and 8 is 10. 1 up here is 6. 1 and 1 is 2. Yes. So 160,000 plus 40,000 in investment minus 48,000 of withdrawals plus 108,000 in net income gets us to an ending balance of 260. Okay, so that's how net income affects owner equity. Always go back to the balance sheet equation when you're confused. Okay, I am going to go ahead and stop this video because I have to erase this board, which actually takes a few minutes.